Ladies and gentlemen, good day and welcome to Sigachi Industries Limited Q2H125 earnings call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Ridhisha from Go India Advisors. Thank you and over to you.
Thank you, Ikra. Good afternoon, everyone, and welcome to Sigachi Industries Limited earnings conference call to discuss Q2 and H1FY26 results. We have on the call Mr. Amit Raj Sinha, Managing Director and Chief Executive Officer, Mr. O.S. Reddy, Chief Financial Officer, and Mr. Vivek Kumar, Company Secretary and Compliance Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. May I now request Amit Raj Sinha to take us through the company's business outlook and performance, subsequently to which we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, Riddhi. Good afternoon, ladies and gentlemen, and welcome to the Q2 and H1FY26 earnings conference call of Sigachi Industries Limited. The financial results and investor presentations have been uploaded on the stock exchanges. I hope everyone had an opportunity to review them. I would also like to take this opportunity to wish everyone a very happy and prosperous Diwali. I begin by sharing an update on the ongoing evaluation and restoration effort of our Pasha Mailaram facility in Hyderabad. The government-led investigation is still underway. However, preliminary findings from our internal review supported by independent safety experts indicate that the incident was caused by a localized dust explosion in the dry section of the facility. The restoration work at Hyderabad unit is progressing in a phased manner. In the production has been relocated to our Dahej and Jhagadia facilities to ensure uninterrupted supply to our customers. The future course for the Pasharam facility will be finalized once the detailed findings of the investigation are received. Based on current assessments, the facility is expected to remain.
Ladies and gentlemen, the management line has been disconnected. Please hold while we get them reconnected. Ladies and gentlemen, thank you for being on hold. The management has been reconnected. Thank you and over to you.
Thank you. Based on current estimates, the facility is expected to remain under temporary shutdown for around 180 days with an estimated revenue impact of approximately 60 crores. As part of our comprehensive support measures, Sigachi has rolled out interim compensation and ex gratia financial assistance for the families of the colleagues we lost, as well as those injured. We have taken full responsibility for hospitalization, critical care, and all medical expenses. Beyond this immediate response, we have strengthened our safety systems across the organization to prevent such occurrences. Comprehensive safety re-audits have also been completed at our Dahej and Jhagadia units. We are taking this opportunity to not only review our systems, but to embed a deeper culture of safety and accountability across all levels of the organization. Sigachi remains fully committed to upholding the highest standards of safety and compliance, ensuring that the well-being of our people always comes first. From an operational standpoint, I'm pleased to share that our facilities continue to operate smoothly, ensuring business continuity. The prompt relocation of production to Dahej and Jhagadia helped us maintain supply consistency for our customers without disruption. This agility facility demonstrates the strength of our manufacturing network and the operational resilience we have built over the years. Meanwhile, our capacity expansion and the growth initiatives are progressing well. We have fast-tracked a 12,000 metric tons per annum capacity expansion of MCC at the Dahej SEZ facility, where the civil work has already started. Once completed, this will enhance our total MCC capacity to 30,000 metric tons per annum. We expect this unit to be commissioned by Q3FY27. This expansion will enhance our ability to serve growing global demand and strengthening our position as one of the leading global MCC manufacturers. On the CCS front, the project continues to move forward steadily, and we are on schedule to commission the plant by Q3FY27. This facility represents an important step in our strategy to broaden our excipient portfolio and capture opportunities in the high-value segment. We also continue to focus on strengthening margins through portfolio optimization and operational efficiency. Our emphasis remains on high-value, high-demand products while gradually reducing focus on low-volume SKUs. This disciplined approach ensures better resource utilization, lowers complexity, and supports sustainable growth. We are simultaneously expanding our export footprint in MCC and introducing new value-added products that will contribute meaningfully to profitability over the medium term. On the API side, we achieved a significant milestone with our new API R&D center in Hyderabad, now fully operational. The facility consolidates API development and analytical capabilities all under one roof. This substantially improving our speed to market and enabling tighter integration between R&D and manufacturing. It will also serve as a critical enabler as we expand our presence in the regulated markets. This marks an important step in our journey towards becoming a fully integrated pharmaceutical company. The center will also help accelerate product development, improve compliance readiness, and create long-term value through innovation-driven growth. We are also advancing our efforts to enter high-value regulated markets. To this end, we are actively pursuing approvals from the European Directorate of Quality and Medicine with nearly 9 certificate of suitability filings currently underway. These developments will help us strengthen our position in the regulated geographies and expand our API portfolio with a sharper focus on quality and compliance. Through these initiatives, Sigachi continues to reinforce its core strength, scaling up its high-value business, expanding into regulated markets, and laying a strong foundation for sustainable long-term growth. Despite the temporary disruption at one of our facilities, our operations remain stable. Our projects are advancing as planned, and our long-term direction remains intact. Looking ahead, we expect to deliver consistent and sustainable growth over the next 2 to 3 years, driven by our excipients, APIs, and O&M service. Our strategic roadmap is clear. We aim to expand capacity, strengthen our product mix, and enhance profitability through operational excellence and disciplined execution. These efforts, combined with our ongoing investments in research, compliance, and infrastructure, will ensure that our growth remains both steady and value accretive. The first half of FY26 has been a period of testing and learning for us. It has reaffirmed our resilience of our organization and the dedication of our people. We responded quickly to the challenges, prioritizing the well-being of our teams, stabilizing operations, and ensured business continuity. At the same time, we made steady progress on our strategic priorities, maintaining focus on execution and, of course, long-term value creation. We are deeply grateful to our employees, partners, and shareholders for their continued trust and support during this time. Their confidence in Sigachi continues to motivate us to perform better every day. As we move forward, our focus remains unwavering on safety, operational excellence, and sustainable growth. With the collective strength of our teams and a clear strategic vision, Sigachi is well positioned to emerge stronger, more agile, and more resilient in the years ahead. With that, I would now like to invite our Chief Financial Officer, Mr. O.S. Reddy, to take you through the financials and the operational highlights for Q2 and H1 FY26. Thank you.
Thank you, sir. And good evening, everyone. During Q2 FY26, Sigachi reported total operating income of rupees 110.5 crores EBITDA for the quarter stood at rupees 7.5 crores, reflecting a margin of 6.78%. Net profit came in at rupees 10.5 crores, to a PAT margin of 9.59%. The MCC segment contributed rupees 66.4 crores, while the O&M and API segments recorded revenues of rupees 13.17 crores and rupees 18.41 crores respectively. This concludes my updates. We may now open the floor for question and answers. Thank you. Hello.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rehan Syed from Trinetra Asset Managers. Please go ahead.
Yeah, hello. Good evening to the team, and thank you for giving me the opportunity. So my first question is on the capacity utilization side. So I want to ask, can you share the current capacity utilization plant-wise for MCC, and what utilization band you are expecting by FY27 considering the plant additions and all?
So further, yes, CFO, you may continue.
Thank you, Rehan Shah. At Dahej, this total around for the first quarter it is 4,200 on half-year basis. Full year it is 8,000. The production, the volume is utilized 3,473 metric tons. It is 82.69% at Dahej. And Jagadia it is 6,900 on full year basis. In the half year, it is 3,450 is available, and the production volume is 2,806, and 81.33% is utilized. And Hyderabad in this quarter is, and total 7,650 is for the first half year is available, out of which 6,279 units produced, and the utilization as a percentage it is 82.08%. Around overall 82% is there. Going forward, we'll utilize almost nearly 90% capacity, and after the new facility come into operational, the new one of 12,000 metric tons, then overall capacity will increase to 30,000 metric tons. In FY27, maybe half year FY27 at the end of the maybe little 50% of new capacities will be, or even
okay. Okay, so just want to clarify, you have said that right now you are running on 90% capacity utilization on full year basis on FY26, right?
Yes, yes. Full year we'll utilize by end of the year, because
okay.
First quarter after reservation of the Hyderabad unit, slowly we are moving from Hyderabad unit, whatever the additional
okay.
we have shifted to the Dahej and Jagadia. And the third and fourth quarter we'll utilize in full. We'll transfer the capacities, and at the end of the year we may utilize around.
Okay, fair enough. And my second and last question is around the China competition, like regarding. So have you seen any pricing aggression from Chinese MCC suppliers in domestic or export market recently? And have we had to take any pricing cuts in FY26 to protect our volumes?
No, not at all.
Yes, not at all. And then,
okay, so just could you please more clarify on the MCC Chinese suppliers, like how the margins are moving around and how they are competitive in nature for us? Just a broad understanding. Like I'm asking, could you please give me some broad understanding regarding Chinese MCC suppliers, how they are affecting, how they are competitive in nature with our company in export market?
So in the regulated markets, Chinese MCC players don't stand a chance.
Okay.
So, yeah, they have not stood chance, and regulated market is much more stringent, and we have not seen them competing against us on any particular customer base or targeted markets.
So is there any competitive edge that you are playing here, or it's like they are not in the same game?
So of course there are certain competitive edges, but Chinese have not really been in competition with Sigachi in the regulated markets.
Oh. Okay, fair enough, and yeah, thank you for this. That's it from my side.
Thank you. The next question is from the line of Pritesh from Lucky Investments. Please go ahead.
Yeah, I just wanted to check on the finished good realizations, both MCC and CCS. So if you could tell us how they have behaved in this quarter, how they were in the quarter preceding this quarter, and how they were on a YOY basis, and if there are any material movements on the realization. And then I will ask you a question on raw material, which I will take up next.
Yes. Yeah, Ritesh. This one, Q1 of FY25, the average realization of MCC is 212 rupees per kg. And
this is
116.
Q1 of the current year, or you said Q1 of the last year?
Q1 of last year, FY25,
okay.
Last year. This year is 216. There is an increase from 212 to 216.
So this is Q2. This is Q2 26.
Yes. Q2. This is the first half year. First half year.
Half year. So you are giving half year to half year.
Yes. Half year to half year. And
okay.
Q1 to Q2 also there is an increase in the price realization. Around
Second.
200. Yes.
Please go ahead, sir. Sorry.
Around 214 is there in the first quarter, and second quarter it is increased, and on average it has come now 216.
Okay. Can you give the same for CCS if possible?
CCS anyway, that is right now it has not come into commercial production. CCS is not there, only small quantities, but as of now it is not there in our product. It will come in the next year. October, November of FY26.
Did the realizations remain what they were, or there were any major fluctuations?
They are also increased. There is an increase in realizations increased. Around it is 600 plus is there. And a small percentage there is an increase in CCS also.
Okay. There was a sharp reduction in the pulp price. So what we heard was about a couple of $100 reduction.
Sure.
So is this correct? And why is it that we are not seeing it in your GP numbers?
Yes. In some there are different grades of pulp there. In certain grades there are $50 per ton. There is a reduction, but still it didn't have impact on the selling price. Selling price, despite of the decrease, it has increased. Because demand also is there for the MCC, and enough supply is not there of MCC in the market. That may be one of the reasons.
No, so the pulp prices have reduced by $50 to $100, right?
But it depends upon the pulp different grades. But certain grades they are maintaining the same. There is no reduction in prices.
At the aggregate level. Was there a material reduction in the pulp price?
No, not material. Maybe very small, minute level.
Okay, so basically, in nutshell, the pulp prices are flat to down, and the MCC prices are up by 2%.
Yes, correct.
Okay. Any reason for this? Disconnects, from the supply side, if any changes?
Supply overproduction is there, then they will compromise to some extent the price, and it is.
No, but what we are hearing is a lot of people have added a lot of capacity, yet the realizations are up. So what is it that we need to understand on the MCC?
Enough supply is not there in the MCC. Still there is a short.
Still short supply.
Yes, short supply.
And I would just like to add in here. There are capacities being added doesn't necessarily translate to competitiveness in the market, because they can't compete with a 3 decades old established pair which are approved in so many products of our customers. So capacity addition necessarily doesn't translate to price reduction to maintain margin or market share.
Yes. They cannot experiment a new supplier product, because the product what they use, if they mix the API product cost is always on higher side. Average, if you take, it may be around 10,000 rupees per kg, but here maybe 200 or some 250 rupees or 300 would be there. This if they mix it to that 10,000 rupees product, then that product quality will go for a task. That's why they don't. They see the continuity of the supply and also the vintage and the quality and the customer satisfaction. All there are many parameters are there. They don't change the supplier that easily, unless there is a proven track record like Sigachi.
Okay. Thank you very much.
Thank you, Ritesh.
Thank you. The next question is from the line of Lakshmi Narayanan KG from Tunga Investments. Please go ahead.
Yeah, thank you. So a few questions. Now, what is our repeat business in general?
Well, almost 80 to 90% is their repeat business.
Okay.
Only, yes.
So, I look at last year, our exports have been around in the range of 55 to 60%. Now, because I just want to understand, given there has been an accident sometime back, how the customers have reacted to the whole thing, and have they shifted suppliers, and how do we intend to get back the displaced opportunity?
Yes, Mr. Lakshmi Narayanan, I would address this. See, there is no denying the fact that there has been a shortfall in the production because one of our units is down. And our customers' business continues to be running continuously, so they are in need of products. We have tried to balance out and prioritize some of our critical customers who don't have a second line of supplier. But there are some customers who we have kind of told them that we will take a couple of months before we can come back with added capacities. So we have had some mutual comfort, mutual understanding, and we have indicated that we will take a couple of quarters before we come back. Until then, they will be looking at alternate suppliers.
Got it. And is there a thing that supplies are actually earmarked for Hyderabad, and that cannot be moved elsewhere? So in pharma, it so happens that certain products are earmarked from a particular supplier site, and they don't really change it, and for changing it requires a lot of regulatory approvals. So how much of our business cannot be removed from Hyderabad for compliance reasons?
So it is not really compliance, because what we have done, or what our regulatory guys have done, is that they have ensured that all the facilities where the same grade of product is established is approved at our vendor's end. So we have there's something called as a bulk dried grade, and then there is a premium spray dried grade. That has to be there. In Hyderabad, we had both the bulk dried and the spray dried. So wherever else there was bulk dried, we had the alternate unit approved at the customer's end. Wherever else there was spray dried, the spray dried unit was approved at the customer's end. So I don't believe that the regulatory approval at customers' end would have been hampering us in terms of changeover to our other units in Gujarat.
In the MCC, can you just give me the mix of different industries you actually serve?
I would say a major chunk, nearly 75 to 80% of the mix primarily goes to the pharma and the nutraceutical industry. A small percentage goes to the cosmetic industry. The balance of it is divided between the cosmetic, the food, and the chemical industry.
Got it. Is it possible for us to get into areas like polymer excipients where companies like Evonik is there? Is that something which we can actually get into?
Very much. I don't deny that. The Sigachi coating portfolio, which has kind of started off a couple of months back, couple of quarters back, is something wherein we are getting into the polymers part of the excipients. The coatings is all to do with the polymers, and this is what we have got into, and we continue to expand as our market grows.
And any size
sorry
of
to interrupt. Sorry to interrupt,
continuation of this question. Can you just finish this question, madam? This is a continuation. I just want to understand what is the revenue coming from this polymer excipient business and what is the target, sir? My last question.
So the revenue at this moment is minuscule because our products are only being sampled out and approved in the new formulations. Okay. Wherever the tablet coating as a need is there, our samples are going out and approved as and when the formulation comes into commercial production, the sales will happen, and that is when it will translate as sales to us also. And at this moment, it will be inappropriate to give out a figure because, wherever the samples are getting approved, once the formulation starts commercial production and it catches market, we will be able to ramp up capacities.
Thank you. I'll come back in queue.
Thank you, Mr. Lakshminarayana.
Thank you. The next question is from the line of Dipesh J. Sancheti from Manya Finance. Please go ahead.
Yeah, hi. Am I audible? Hello. Am I audible?
Yes, you are audible.
Okay. Could you share any updates on the insurance claim related to the Hyderabad incident? By when do we expect to receive the compensation?
Yes, Dipesh. This already we have filed we have filed the application, and then all the process is going on, and maybe we are expecting in this quarter Q3 the insurance proceeds against the loss of the fixed assets, that is around 51.48 is there, and we have also have the loss of profit business interruption policy that it will take little time. That is there for a period of 12 months, and that will be there maybe in the next fourth quarter or at the end of the year. We are expecting.
Apparently, we also gave significant compensations to the workers who lost their lives and got injured. Is there a policy for that also where we can claim that, or is it from the company's account only?
Yeah, to certain extent, we have climbed wherever the PF, ESI, the employee accidental policy, but the rest of the thing, to certain extent, company is bearing, and also we are seeking the support of the government also.
Okay. And when do we expect the Hyderabad facility to resume operations?
It is as of now the safety protocol and all the sites, even here also, and regulatory approvals. After seeking the regulatory approvals, then we'll go ahead. Maybe we'll get clarity by end of this quarter.
By end of this quarter, okay. Now, just wanted to understand how much of the lost production from the Hyderabad unit has been compensated through the Jagadia and Dahej units. If you can just mention about the volumes and the value of in this quarter.
Yeah, volumes, the total capacity of the Hyderabad unit is 6,400 metric tons. This last year we have increased the capacity of 7,200 in both Dahej and Jagadia facilities, and to some extent anyway, every year there is an increase in the demand also. But to some extent, we are shifting this Hyderabad production loss to the Dahej and Jagadia. And in the Q3, Q4, we'll push more, and then the utilization of Dahej and Jagadia will be on full scale. And also that is the reason earlier itself we have planned to increase the capacities for the MCC by setting up of a new facility. But now we have expedited that process, and then it is going on vigorously for the increase for the additional 12,000 metric tons capacity. But as of now, the Hyderabad capacity we are pushing to the Dahej and Jagadia.
If you can just quantify that, how much of this was, how much of the lost production was compensated in this quarter?
Yes. The entire 6,400, whatever we used to have around 6,000 metric tons on operational level, and the entire the production will shift to the Dahej and Jagadia, Q3 and Q4. But this quarter, Q2, we couldn't push because there are internal safety audits, and then this external consultants help also we took, and the expert opinion to avoid any kind of the unfortunate events or any kind of even small things also. That's why we couldn't push in this quarter fully. But third quarter and fourth quarter, we'll utilize it in full. That is already done, this audit, and then all safety measures. We took it very at minute level.
Right. Thank you so much.
Thank you, Dipesh.
Thank you. The next question is from the line of Arnav Sakhuja from Ambit. Please go ahead.
Hi, thanks for taking my question. So my first question was basically with regards to the exceptional item that we saw this quarter. So we saw around 4.7 crores of exceptional items. So just wanted to know, is this something related to any insurance claim we've got from the fire incident, or is it something completely unrelated?
Yes, thank you. This in the Q1, we have mentioned the total the stock loss we have expected, but later on we realized that that is an excess provision which was reversed, 4.53. Out of last first quarter, we have provided total 121, and there is a stock loss of 7.66 that was included. But this 4.53, whatever it's there, that one is not there. That's why we have reversed. That is an exceptional item. We have reversed to the exceptional item only.
So does that mean that the entire remaining amount, so 121 crores minus 4.7 crores, that will be the total amount borne by the company because of the fire incident?
Yes, correct.
Okay. And a part of this we expect to get back from insurance, right?
Yes. This is expected to get it from the insurance, the balance amount.
Right. And if I look at the year-on-year performance, so the gross margin, correct me if I'm wrong, has fallen by around 170 pips. So what is the reason for that? Is it, again, something related to shifting operations because of the fire incident, or any other reason?
Yes. This is the reason. Shifting of material, there is an involvement of transportation material. The transportation is increased. And right. Because of this only, there is no other reason. But Q3 and Q4, it will get stabilized.
Okay. And do we have any estimate as to what share of that exceptional items, the cost that we're bearing for the fire incident, we may be able to get back from insurance? Is there any estimate?
Yeah, there is around 50 plus crores, 51 around 51 crores. We'll get it from the insurance towards the fixed assets loss, and also the business interruption policy is there. Loss of profit that is there. That would be around 16.5 crores. Around 65-66 crores is expected from the insurance. And okay. Stock loss of around 7.66 we have claimed, and now 4.65 we have reversed. The balance around 3 plus 303 odd crores we'll get it from the insurance. 66 around nearly 70 crores, say 69.5 or around 70 crores we are expecting.
Okay, so basically we'll bear around 40 crores totally.
Yeah, even that also we are not foreseeing, but we are seeking the help of the government.
Okay.
Not to maybe that is under discussions anyway. Yes.
Okay. Thank you for answering my question.
Thank you.
Thank you. The next question is from the line of Dhruv Mimani from Nivesa Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. So I want to know what is the actual amount of claim filed with the insurance company?
The amount filed is 51.48 towards fixed assets loss, and the stock loss we claimed 7.66, but whereas 4.65 it will not come. Anyway, we have reversed. And then this is loss of profit around, that is calculated at that point of time, that is estimated around 16.5 crores. Around 70 crores, nearly, all put together.
Okay. And so what, when the 12,000 MTA facility in Dahej will be operational, what would be the peak revenue that the company would achieve from that facility?
Yeah, from that facility, in the peak revenue is around 250 crores.
Okay. And what would be the margin bifurcation between of MCC and MCC?
Can you please repeat? Margin proposition?
When we export MCC and when we domestically supply MCC.
Yeah, minimum 20% minimum would be there for 20%.
The difference in EBITDA margin or PAT margin?
This is in a way realization margins I'm talking about.
Okay, in terms of EBITDA?
EBITDA also the same, almost percentage-wise it is the same would be there, EBITDA percentage-wise total. Realizations, the same level only it would be there.
Okay. And when do we expect the facility to be back from the government? The Hyderabad.
Can you please repeat?
When do we expect to receive the facility from the government?
That anyway we'll get clarity in the third quarter. The regulatory approvals also we have to receive.
Okay. Thank you, sir. That's it.
Thank you. Thank you.
Thank you. The next question is from the line of Himanshu Bisani from Pinpoint X Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So first question, the percentage of other businesses that includes the API and the O&M business has on percentage-wise gone up. So how much of that was from the gross level and how much was that from a decrease in the MCC revenue?
Yeah, if you see the contribution, revenue contribution, MCC has come down now from when you see the previous half Q2 versus this year Q2, 81% to it has come down to 60%. And operational O&M business it is increased from 8% to 12%. And API business it is increased from 7% to 17%. And other products, food and nutrition or the other products are 4% to 11%. This is mainly because the MCC has come down and the other operations it is increased. Otherwise, if the MCC also is increased, more or less in the same level, maybe O&M would be there around 10% and API would be there even less than 10% as of now. But slowly API business will increase. And other allied traders also just maybe in the 5-6% level it would have been there.
Okay. And sir, what is our margin difference between our MCC business and O&M business, basically?
Yeah, almost in O&M around 20-22% the margin is there. And
okay.
MCC also the except this during the tenure of this unexceptional or a separate incident. After this incident, it has come down. Otherwise, it is almost the same thing, same level.
Okay.
But there is
a couple of
yes, please.
Yeah, sorry. A couple of questions on the CCS side. Sir, what is the sales mix that we are planning to look at between domestic and export market?
Domestic and export market, we give priority to the export only. Obviously, the realizations also are on higher side for the exports. and we see the price realization and the supply as our this thing wherever the at present from Hyderabad unit, just we wanted to support to our customers. Wherever there is a second choice is there, alternate vendors are there, they will procure for time being, and otherwise we will supply. We also wanted to support to the customers, and also at the same time we want to increase the realizations. We'll just balance it out, and unless once till such time the production stabilizes.
So a similar outlook, similar to an MCC would be the export mix for the CCS plant as well, right?
Yes, correct.
Okay. And sir, finally on the margins, like how superior are the margins? Because I think realizations are almost 3.5x of what for CCS compared to MCC. So what would be the margin difference in that on EBITDA level?
Yeah, margins are higher in CCC, around 30%, up to 30%, even better than MCC.
Okay, got it, sir. Yeah, that's it from my end. Thank you, sir.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Devang from DD Enterprise. Please go ahead.
Yeah, hi, sir. My two questions are there. One recent announcement was there regarding the IPO utilization fund of 1,000 crore.
Yeah, can I explain? This IPO utilization is 1,000 crore is not there. That is anyway on as per the this thing shareholders approval is there for any borrowing limits. That under 181C. We have to take the approval of the shareholders. On higher side, we are taking it for 1,000 crores, but each and every time any changes are there, that will be a decision should be taken in the board meeting, and also if required shareholder approval, and then there is reasonable explanations and announcements will be given to the NSE.
Okay, and the other, so yeah, sir, continue.
This is not IPO. This is just this one. Broader levels of the approvals for any debt in future.
Okay. So the other question is, the fire incident took place, if I'm not wrong, in the last quarter, right?
Yes, sir. 30th June, last day of the first quarter.
Yeah, and then what's the reason the promoter holding has came down by 4%? Like it shows like that to the. It shows like that to the street that like why promoter holding should go down when the disaster has been happened with the company. The promoter should stand with that, right?
There is no relation at all. Only thing is there was a LAS which it was announced, and the LAS providers there was a renewal, and then we thought of instead of renewing anyway we thought of paying it. Otherwise, there is no relation also. There is no correlation for this.
No, I'm not getting it. It's a loan against security was there, right? What you are telling me?
Loan against shares.
Loans against shares.
At the time of this thing, when we have issued preferential shares, preferential warrants, and at that time the promoters also participated equally. And that time they borrowed funds and then infused it into the company only. And later on, at the time of renewal, either we have two options. Either we have to secure, we have to put in more shares because the share price also has come down, and then or we have to repay it. Instead of that, we have repaid some amount. The reason it has come down. Otherwise, nothing is utilized or nothing is taken away from any other.
Any other future plan to reduce the stake?
Yeah, as of now, no plans are there.
No, if you are going to borrow 1,000 crore, that would be the debentures.
That is, that may be a bank debt. That may be even it's not 1,000 crores debt, or that is a broader level it has taken. But all the companies they'll take for the future requirement also. They'll take the approval of shareholders at once. That is the reason it was. It is
No. I'm understanding like if you are going to issue the equity shares or if you are not going to issue the equity shares, then how, like it's a bank debt or what's the plan? Like plan. I want to understand the plan.
Yeah, Devang.
Sorry to interrupt, Devang. If you have a follow-up question, please rejoin
No, ma'am,
the
it's
queue.
not a follow-up question. It's the same question, ma'am. Let them clear out that question.
Devang, this one, equity and this 1,000 crores, there is no correlation. This is only for debt. If you want to raise a bank debt, there should be a limit should be available. And even NCD also, limit should be available. That is completely related to debt only, not equity.
Okay, that's fine. Thank you. Thank you.
Thank you, Devang.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Karthik, an individual investor. Please go ahead.
Good evening, sir. During these tough times, management has given a better number. I'd like to congratulate for all the efforts you're putting in. I have 2 questions. One is on the promoter shareholding has been pledged and it is getting revoked and a lot of shares are coming into the market. I understand promoter also have their personal life. It is their shares, they can do it, but it kind of paints in a wrong way to outside. So is there more shares getting liquidated because of this pledging and revoking? Is there anything in the plan or how you can handle this? Because it is giving us a jitter as an individual investor.
Thank you, Karthik. As of now, there is no plans for further downgrading, further selling, or further reducing. But only this thing, there was as I told in the previous question, there was renewal already 1 year over, and then at the time of renewal, either we have to pledge more shares or we have to repay. Because of that, some shares were sold and then repaid. Otherwise, nothing is there.
My second question is, since like outcome of incident, we should learn the best practices and we should apply to our other 4 manufacturing plants. So how much capital we are looking to improve the existing sites, to improve the process and improve the machinery or safety scenarios? So how much capital we are going to spend for the remaining manufacturing plants?
Capital, in terms of capital, it is not. It is very minute amounts only. Only thing is the precautionary measures, and then what is the reason, what is the root cause, and we called the vendors, the suppliers of the equipment, and there are internal audits of the safety audits, and with external teams also, and safety protocols, safety trainings. Earlier also we were doing, but still we are rigorously doing these kind of things only, taking precautionary measures, but there is no direct involvement of the capex. But wherever it is required or the professionals, if they suggest, then we don't mind incurring. But safety is our prime motto.
Thank you, sir. I will join in the queue.
Thank you, sir. Thank you, Karthik.
Thank you. The next question is from the line of Ritesh Bhagwati from Alpha Plus Capital. Please go ahead.
Hi. First of all, thanks for taking my question. Well, I just want an update on our working capital days and the trajectory for the full year.
Yes, thank you, Ritesh. The working capital days, as of now, the DSO days are around more than 100 days. It's there. But now we have started measures for reducing first quarter to this quarter also there is a reduction. And also the payables are around 30 days, it's there. And the stock is around raw materials, already some excess stock is there. Because for the Hyderabad unit, we have already placed the orders and the material is coming. And then now we have immediately after the incident, we have asked them to stop. But still some material it has come. Maybe around 100 days if you take the receivables and then stock is 60 days and minus 30 days, around 130 days, 120 to 130 days is the working capital cycle.
Okay. Thanks for that clarification. And my last question is on, the pledge that we hold as on date. So, how do we see, its trend going ahead? Do we plan to, de-pledge it? And if that's the case, how and what could be the scenarios, that would help us achieve that?
Yes, thank you, Ritesh. As of now, we don't have any plans specific, but if required, based upon the requirement, if there is any capital infusion and then participation, then definitely it will go up. But as of now, there is no pledge will not go up. But at the same time, in long run, wanted to increase the stake. Promoters they'll participate in further issues, and then slowly that will be increased. The promoters holding pledge percentage either will maintain or it may reduce a little. It depends upon the requirement of the company, and then obviously promoters intend to increase their stake.
Okay, that's very comforting. That's it from my end. Thanks for taking my question.
Thank you, Ritesh.
Thank you. The next question is from the line of Rahil S. from Sapphire Capital. Please go ahead.
Yes, hi sir. Good evening. Can you hear me?
Yes, sir.
Yes, sir. So first two questions. We are running at 18,000 metric tons per annum capacity as we speak, right?
Yes. 18,000.
Which you expect to be utilizing 90% of by the year end.
Yes, absolutely.
Okay. Just that clarification. And secondly, any revenue or margin guidance for FY26 and FY27 once we have the new capacity running of the addition of 12,000 at the H. So any sort of outlook or guidance there?
Yes, thank you, Rahil. Anyway, that is future this thing. But okay, of course, we'll in the last quarter also we hope we'll achieving not less than 575. But there is a possibility to increase further also by end of March. And also the 12,000 metric tons additional capacity, it will generate on its full capacity around 250 crores. But FY27, a part of the revenue is expected to come from that additional expansion. But normal growth also would be there. But FY27 onwards, this year maybe some small disturbances would be there. Of course, it will be better in Q3 and Q4. But going forward, it will turn around, and then it will do the regular growth. CAGR.
Okay, got it. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Shashank Agarwal from Cisco. Please go ahead.
Sir, I just two questions. So, what are your plans on the Oracle facility? And sir, what is the global demand for MCC and CCS? Hello.
Yes. Hello.
Yes, sir.
Yeah. Hello. The Oracle facility that just in the API, yes, anyway we have not announced, but we have different plans are there. We'll come up with an announcement for that, either API or MCC or we have internally we have worked out, but after getting it concrete decision if we take, then with the after the approval of the board, we'll announce it, Shashank.
So this will be after all the expansions that you have planned, or
simultaneously also we can plan, but we have worked out different projects, different this thing with the extensive works we have done, and then we have clarity, but we have not taken any decision. But the decision has to be taken by the board, and then later on we'll announce it. But at this point of time,
however, Shashank, I would say that over the next 30 days, we are expecting the environmental clearance to be issued by the government for that Oracle facility.
Okay, sir. And so for the API segment, the four CEPs that have been filed, sir, when are you expecting the approval?
Sir, the queries are going back and forth. It will be difficult to quantify a timeline, but I believe that we should be in a position to have it cleared within the next 2 or 3 quarters.
So the revenue guidance that you had given for the year, that still stands for API segment?
Very much. Still stands, yes.
And the second question is regarding the global demand for MCC and CCS.
So MCC, the global demand is expected to touch $1.4 billion by 2034.
Okay. So can you give it in quantity in tons?
So there are not many documented reports on quantities. Most of the capacities of the leaders are in quantities, but when it comes to the demand, it is always in $1 billion. It's not really quantified as metric ton. And whereas CCS by 2035 is expected to touch about $800 or $900 million.
Okay. Thank you, sir. Thank you for the reply.
Thank you, Shashank.
Thank you. The next question is from the line of Dinesh Kulkarni from Finsight. Please go ahead.
Hello, sir. Am I audible?
Yes, please.
So thanks for taking my question. Sir, can you just tell me what is the kind of capital expenditure for this year and next financial year we expect? I'm assuming part of the for the facility which has been damaged, including that.
Yes. The capex for the entire this year and next year, we are expecting anyway. We can already whatever we have planned, I can tell, but whatever we have not yet announced, I cannot disclose here. But for the MCC 12,000 metric tons, it would be around 100 crores. The capex is there, out of which the revenue generation would be 250 crores. And CCS, we need to spend maybe around 60 crores. Additionally, and then there is already available around 33 crores. That is total around this year, but we may not incur the entire amount by end of this year. But these are the capex plans already we have finalized, and then we are going ahead. The implementation also is going on.
Okay. Sounds great. So my question is related to the incident which we had in one of the facilities. Is it impacting our clearances or expansion, projects across other plants, or because this is all related with the government regulations, right, and authorities?
No. There is no effect at all. But the other states are also very eagerly inviting us, and they are asking us to set up the plants. The other states and even within the state also.
Okay, that sounds great, sir. Okay, thanks for taking my questions and all the rest.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Athar Syed from Smart Sync Services. Please go ahead.
Hello, sir.
Athar, there is a disturbance in your background. Can you please look into this?
Yeah, so I have only one question related to this, sir. What is the amount we are expecting in insurance claim, and when do we expect this claim?
Sorry to interrupt. There is a lot of disturbance in your background.
Okay, anyway,
please rejoin the queue.
Okay.
Insurance amount expected is around 70 crores, including loss of profit, and we get the clarity. We are expecting some amount, at least ad hoc amount in Q3. Thank you.
Thank you. The next question is from the line of Siddhant Maheshwari, an individual investor. Please go ahead.
Yes, thanks for the opportunity. Sir, my question will be a slightly repeat of the previous question. Sir, whether this 121 crore of extraordinary item, that includes, only the fire-related compensation or the loss of machinery related amount. And my question is that will company be able to recover the fire related compensation amount also from the insurance company, or the claims are only for the loss of machinery and buildings?
Yes, Siddharth, thank you. This total 121 crores includes fixed assets around 51.48 crores, and there is a stock of loss 7.66, and the compensation and medical expenses are 59.35 crores, and there is a GST reversal 2.52 crores. All put together, it is 121 crores. And now the compensation, it is expected, the claim it is expected is around 70 crores is there, including the loss of profit and the stock loss also. And the medical expenses compensation, to some extent, it is covered under a separate insurance, group insurance and ESI and PF, EDLI. And but the compensation also, we are taking the support of the government, and that is not yet finalized. If the reduction is there, that will be reversal. Once that is confirmed, we will reverse the compensation also, and on receipt of the claim, we will reverse this. That will be treated as
any further fire-related compensation in subsequent quarters, or we are already done?
All these losses already we have provided. There will not be any separate provision on this, and we are expecting some ad hoc amount in Q3 from the insurance.
Okay. Thanks a lot.
Thank you, Siddharth.
Thank you. The next question is from the line of Shivaji Mehta, an individual investor. Please go ahead.
Hi, thank you for this opportunity. So there was some news article regarding the insurance report when it was tabled in the Chief Secretary's office. There was some news item that our facilities could be blacklisted and the state government may not provide future incentives to Sigachi. Just wanted your inputs regarding this.
Actually, we don't have. Thanks, Shivaji. We don't have any information on this, but there is. I don't think any thing. So far we didn't have any information, and it's a.
Got it. No, this could be just rumors then. So my next question was regarding this insurance claim of 51 crores. So that's dependent on the insurance report being positive and in favor of what we are claiming. So what is the probability as per you that we will get a positive report from the insurance companies?
Yes. We are expecting positive report only. We don't have any second thoughts on that. We don't have any other.
Got it. And so also on the CCS facility, what kind of margins are we targeting at the EBITDA level once the facilities ramp up fully?
Around 30%. The CCS margins are on the higher side than MCC, but around 30% we are expecting.
Got it. Thank you and wishing you all the very best.
Thank you, sir.
Thank you. The next question is from the line of Ankur Savaria, an individual investor. Please go ahead.
Good evening, sir. Regarding raising debt of 1,000 crores in near future, explain why the company would ask the shareholders to agree on such a huge number of huge sum when our market cap is only about 1,500 crores, and it is double this entire sales for 1 year, sir. So what expenditure do you see in near future that you want a permission for 1,000 crore of debt?
Yeah. As of now, it is not mean that we'll take the total debt. As and when it is required, we'll take the bank loans after board of directors approval. But as of now, it doesn't mean that 1,000 crores debt will be taken. Or whenever there is an opportunity, now we are expanding and any capex is required, either we can go equity or debt. If we go for equity, there is no requirement. Even if there is a short-term arrangement, if it has to be made, then we'll take, and then again that can be replaced with our further equity infusion. But it's not the case that the company will raise 1,000 crores debt.
Yeah, but when you are asking for such a huge sum, there might be some expected
even now
expenditure that.
Ankur, one more thing, even the company size also is increasing. If you want to take the working capital limits or at any point of time, if suppose right now we have 200 crores of limits are there, but of course the utilization would be around 130 crores or so. But once it increases to 300, 400 crores, then we cannot pass and take the approvals. Normally, this is the practice of the companies to take the approvals, and then as and when there is a requirement and based upon the opportunities, a debt will be taken, and then later on it will be offset by the internal accruals or equity infusion or a further cheaper debt. If you take a debt of 300 crores and again there is a further debt or NCD something we are raising, then all the existing 300 crores and another 300 or 400 crores also is required to replace it. For time being, the total debt limit is required up to 700, 800 crores. And then after taking the new debt and paying off the first debt, initial debt, then it will come down automatically. But there should not be any overlapping, and then because of non-availability of the limits, we should not miss the opportunity. That is the reason companies they take the higher limit. It doesn't mean that company will take a debt of 1,000 crores.
Are you again planning to go through the preferential share route that you did earlier?
Yeah, as of now, we cannot disclose anything, but there are different plans are there. But once the board approves, then which is better good to the company, then we can disclose it, Ankur.
The last time, sir, the preferential share route that you took, you raised about the preferential share amount was very big, and it was only seen as an opportunistic way from the promoters that they did not have the money. They took part in the preferential share, and later they had to sell their shares. So it was very opportunistic that you, at a price of 26 rupees, you took the preferential share, sold the share at 40 rupees, and have reduced your promoter holding. So what is to the market and to the shareholders, it is not a good sign for what the promoters are doing.
See, Ankur, always the promoters, they see their vision is different. They wanted to do good to the company. And see, at the time of requirement, the promoters, they came forward, and then at that time, see, that is anybody is investing or infusing into the company, it is some sort of risk is involved, and they came forward and then invested into the company. And there is nothing wrong. As per the Act, as per the applicable provisions only, it was invested, and we are keep on.
But everything is, see, I agree that everything is as per the rules.
Yes.
But you would see that the entire chapter of your preferential share, some of the people did not put in their money in time. Their money was forfeited. The promoter had to sell their shares on the last day for which they could deposit the money. After that, they had to pledge the shares. So, if in case you have the route of going and getting debt from the bank, don't you think that the management also has to show their faces to the shareholders, and it should be in a good light that we see them? We need not see them as an opportunistic promoters who would like to do that again and again to the shareholders. I don't think that shows good on the promoters.
Yeah, Ankur, that is the decision, the opportunities to be seen, and that is the decision of the investor. As an investor, they have invested into the company. There is no other motive. And depending upon the market opportunities and the requirement of the cash flows into the company, they took the decision, but nothing wrong in that.
Okay, sir. Thanks a lot for answering my question.
Yes. Thank you, Ankur.
Thank you. The next question is from the line of Suresh Kumar T, an individual investor. Please go ahead.
Sir, good evening. Hello.
Good evening, Suresh. Good evening, Suresh.
Sir, in your fixed assets, value of the building is more than the plant and machinery, sir. Why is it so, sir?
Yeah, building, there is a separate new building is there. Obviously, sometimes there is more than plant and machinery. Even plant and machineries can be infused later, but once the production is started in the running facility, we cannot do the civil works. That is the process being followed by any other the capex, capital intensity industries. They incur the civil costs, whatever they have to incur. And because during the operations, getting civil works done, it's a challenge. That's why do the complete civil work, and later on we can keep on infusing the equipment and to increase the capacity segmentation.
One small thing, sir. For the last 2 years, our building value has been increased by 150 crores. Actually, what we have done, sir, in that amount?
Yeah, the buildings only we have constructed. And wherever some alterations are required or even re-strengthening done in some cases, and this is completely for the civil works we have invested.
So is it a corporate office or a plant, sir?
At the plant level only. Of course, okay. That is at plant level only, all the 3 plants. Majorly for Dahej and Jagadia.
Okay.
And
thank
also, sir, thank you.
Thank you. This was the last question for today. I now hand the conference over to management for closing comments. Thank you, and over to you.
Thank you. As we close today's call, our focus remains on strengthening the operations, advancing our expansion projects, and moving forward on our journey towards becoming a fully integrated pharma company. With focus on disciplined execution, we are confident of creating sustained value for all the stakeholders. Thank you for joining us, and we look forward to interact with you again next quarter. Thank you.
Thank you. On behalf of Sigachi Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.